Welcome to the Growing Your Business podcast, a program created to answer the question, what's in it for me, for both the business and their customers. Today's guest had this to say.
Your risk of dispute is much higher, therefore your risk to the processor is much higher. And therefore your risk of funding holds, your account getting shut down, we're seeing a lot of that right now. And I've seen a lot of people on the forums that are like, oh, I've been with this company forever, never had a problem, highly recommend. And I'm like, you might want to be careful. A week or two later, my account got shut down.
Now, stay tuned as we hear more on their values, mission, and why they continue to grow their business. Joining me today on the Growing Your Business podcast is Trey Rush with PayTechPlus. Trey, thanks for joining me in the studio today.
Thank you very, very much for having me.
Glad to have you. So let's talk about the value you bring to your customers.
So the value that I bring in the shortest way possible is similar to what a really good insurance agent or a really good insurance broker would bring to their client. So for the businesses that are a right fit for my business would be companies that maybe need more than just like your normal PayFac account, like Stripe or Square, just something, that just works, you know what I mean? So that the businesses that might have a little bit more risk in taking transactions, and that usually happens with companies that are more service-based, and especially ones that run larger transactions. There's more risk involved, and so having someone that knows what they're doing to help mitigate that risk becomes a lot more important.
Yeah.
So, and then somebody that, when they run their payments through their merchant account, they want to know that they have a single point of contact that they could pick up the phone or text and get a hold of in case they need to make a change, or if they have an issue, that they know that they have somebody that actually cares, about their business.
Yeah. Well, you mentioned the ranges. Now, a lot of small businesses use Stripe or some of these others just for a quick and easy pay portal so their customers can pay them, they can get paid. You mentioned the ranges of risk. What are we talking about here?
So there's, again, a long and short version of it, but I call it dispute risk because that's really what it boils down to. And almost all the businesses that I talk to, unless they've dealt with this problem specifically, don't understand that there is a risk. It's just a day-to-day. Well, if I run a payment, the money moves from their account to my account. How hard could it be? Yeah. Well, what they don't realize is that all these transactions have up to a 6-month dispute time. Wow. And so in reality, they're more like a 6-month loan, at least to the processor, because if somebody disputes a transaction, let's say it's $1,000 for sake of argument, and let's say that dispute gets held up, meaning that the business loses, right? And the processor goes to get that money to pay back the cardholder, and it's not there. Well, the processor's stuck paying it. So these processors, every processor does incur risk when processing a payment, and therefore so does the business accepting it. And so a lot of people don't realize that, and it's becoming a real problem that we can dive into a little bit later on. But that's what I mean when it comes to risk. So it's how likely is a dispute to happen, and then how likely is that business to be able to cover that dispute.
Yeah, I think anybody that's been in business for any amount of time that accepts this type of payment has been on one side of that, right? So they know it's a risk. And for businesses just starting, you're like me, you don't know what you don't know, especially when it comes to risks. So the most common business, you mentioned service industries. List some of those that your customers, the types.
Gotcha. So I would consider them like your professional services. So your bookkeepers, CPAs, IT firms, marketing agencies of really any kind. That's a huge gamut of options there. Printing services, sign companies, but it could go into B2C as well, like your contractors, electricians, plumbers, dog groomers, right? Anything that's service based.
That makes sense. So talk to me about the process of onboarding. Let's say I managed to get you on the phone. I've gone through your website. However, we'll talk about contact later. But I finally get a chance to talk to someone that's going to help me. Right.
Gotcha.
So what's the first call like?
So that's actually a very interesting question, and it's a little bit different than what some businesses would be used to if they've dealt with a PayFac. What I call a PayFac is a payment facilitator, and that onboarding process is almost entirely what's different between what I do and what they do. Okay, so that onboard includes an underwriting process. So with me, we have a 15-minute discovery call. We ask questions back and forth, decide if we're a good fit, and make sure that there's value there on both sides. Yeah. And then from there, we fill out an application, which takes about 5 to 10 minutes. It goes to underwriting, which could be anywhere from an hour to a few days. Once it's approved, then we go into implementation, whether that's setting them up with a payment portal or shipping them a terminal if it's a brick and mortar business, or working on integrations, which is becoming more prevalent these days. I'm integrating with a software or putting a payment button on a website or integrating with an e-commerce platform, things like that.
So integrations, by that definition, is like basically the different ways you get paid by your customers.
Correct.
And you can help solve those or
streamlining.
Yeah, find out what they're doing and streamline that. That's interesting. So Trey, I understand an important part of this is any policy or whatever you put together, a solution you put together for your customers, there's some underwriting there. Tell me, what does that mean?
Okay, so there's traditional and then there's PayFacs. And let me kind of explain the difference.
Yeah.
So your PayFacs are kind of like your name brand, like ones that you would recognize: Stripe, Square, PayPal, QuickBooks Invoicing.
Okay, yeah.
Those have actually become in the past they weren't really competitors, and now they have become competitors because of this issue we're talking about. But traditionally what has happened is kind of what I described earlier, which is, we have a conversation, I ask some questions about the business, we do an application, the processor gets a little glimpse into your business up front to determine, okay, is this someone we want to process for, which is a pretty low barrier to entry, but just to make sure there's no glaring red flags. Yeah. And then you get approved, and then you get a risk profile, which is like, what is your transaction limit? What is your monthly limit? Yeah. Things like that give you an idea on where you stand with the processor. They might say, we're going to approve you and your transaction limit's $5,000 or $10,000 or $20 or whatever. Yeah. Monthly, we're comfortable processing $50,000 for you. Mm-hmm. Okay. And so you have an idea. With PayFacs, they don't do that. So they make it to where you sign up, you answer a few questions, you usually get an instant approval. You can start taking cards right away. So they don't know anything about you. Okay. So that would be the equivalent to signing up for insurance. You answer a few quick questions, and then you're like, okay, well, what am I covered for? Oh, well, don't worry about that. We'll figure that out if something happens.
Oh, yeah. No, thank you.
So with traps, they usually make it pretty easy to fall into, right? The sign-up process is extremely easy, which makes it appealing, and it is. If you're like, I need to start taking payments quickly, I just need something easy, it's appealing. But it causes so many problems later on because, especially with newer businesses, or if you're in a situation where things fall outside of the norm. Okay, for example, if you're a business that does, $15,000 a month in cards, and you have a few large transactions, that could trigger a hold. Okay, or if you're, at a certain point of the month, you're just taking more volume than usual, or start taking larger transactions than usual, it could trigger a hold.
Oh, yeah.
And so now your money's tied up. They're going to ask you all the, for all these documents, P&Ls, bank statements, all this stuff.
Puts a halt to your business right there.
It stops it dead in its tracks.
It might be a peak moment for your business.
Right. Yeah. You can't take payments. And that funding hold is a risk. And so that happens quite a lot with these PayFacs because, you're just signing up for yourself online. You don't know that these questions have an impact.
Right.
And so my process is a little bit more work up front, but it saves so much headache later because you know where you stand. The processor knows where you stand. Everybody's in agreement. Yeah. We've all sat at the table and the cards are on the table. So it's just a lot more transparent. So that is the main difference is, if your business fits any of those line items, I guess you would say, you run larger transactions especially, you have a variable success type service, absolutely shouldn't be with a PayFac. It eventually is going to cause problems.
It's not if, it's when.
Correct. Excellent. And this is why I'm such a big advocate of, using compliance strategies for what I call tender-based pricing, meaning, or offset pricing, meaning that the customer or cardholder is paying the fees for accepting credit cards. In the past, this was more of a controversial type of strategy, but it's become very mainstream now, where it's just as common and probably will end up being more common than just a traditional flat rate. Because if I'm paying your business with a check, you have no risk,
right.
if it doesn't bounce, right?
Yeah.
But and it doesn't cost you hardly anything to accept that check. Versus if I pay you with a card, you have much more risk, and you're paying fees to have more risk.
Right.
So if I'm paying your business with a check, it's like, well, why am I paying the same rate as this person that has all these additional advantages and benefits for a cost of business that doesn't really exist for me?
Right.
So, there's some strategies, and we can go into that at another time or whenever, because that has to be done in a compliant manner. That's something I also specialize in, which can save businesses thousands and thousands of dollars, but it's a way to mitigate some of that risk.
Yeah.
You know what I mean? So it just kind of, because the way I look at a transaction is, if I'm paying you with a credit card, for me as a cardholder, that operates as an insurance policy.
Yeah.
You know what I mean? I know that my bank or my card has my back if something goes sideways. That's an insurance policy, right? And so if I have the insurance policy, I should be paying for it. If I go rent a car and they're like, do you want insurance? They're not going to pay for it.
Mm-hmm.
I'm going to pay for it.
Correct.
So that's the biggest thing that I really want business owners to understand, is that because you have that risk, there are things that can be done and strategies that can be implemented to help mitigate that risk, but also to help pay for it.
Yeah.
You know what I mean? With anything, if there's higher risk, it's going to cost more.
Yep.
With anything. So I'm just trying to kind of put it out in the universe that, the businesses, not in every situation, but businesses getting stuck paying for all the fees isn't necessarily just the cost of doing business anymore.
Right.
Depending on the business and,
of course,
several factors.
Right. But again, a call with you can begin to solve that.
Yep.
Stay with us. The Growing Your Business podcast will return right after this. The Growing Your Business podcast is sponsored in part by Visual Learning Solutions. Stands out with its expertise in crafting immersive audio and video experiences. Their creative team has over 30 years of experience delivering dynamic internal training programs tailored to various industries. They ensure the audience receives a compelling message, promotes brand awareness, and increases return on investment. They also excel in producing marketing content. Learn more at their website, visuallearningsolutions.com. Please check our show notes for sponsorship links and additional details. Now, back to the Growing Your Business podcast with Buddy Broyles. How long have you been in business?
I've been in business a little over a decade now.
Wow.
So I'm definitely past my 10th year.
Nice.
But I've been in this space since 2013.
What got you started in this business?
Complete happenstance. It just completely fell in my lap. I was in the health club industry for almost a decade before that, and then that opportunity got shut down quickly, leaving me in kind of a
career limbo.
Yeah, career limbo. It's a great way to put it.
Yeah.
And one of the other managers that I was close with was like, "Hey, man, did you land anywhere?" I'm like, "Not yet." He goes, "Well, I have this job at a payment processor." And I was like, I'm a big movie guy.
Yeah.
Like my wife and I pretty much speak in movie lines almost.
Yeah.
And the first thing that comes to my mind was Office Space.
You bet.
Right? Which
TPS
was actually
reports.
filmed off 635, not too far from here. And I'm thinking like the most boring, put a cover on your TPS report type thing. In reality, it was actually more like Boiler Room.
Oh, wow.
It was extremely hardcore sales environment, which is not my cup of tea, but I was versatile enough at the time that I could make it work, at least when I thought we were really benefiting the customer. You know what I mean? It was a really pushy environment. Again, not my style, but when I felt like we were really doing like the most good, I viewed it as more of like a tough love conversation. And then I found out our company was just as bad, if not actually worse than most of our competition. That went, to the wayside very quickly, and I couldn't sustain that. And then I had a mentor convinced me to go off on my own. I didn't know that was an option, and I did. We started small, built our way up completely off of word of mouth and referrals.
That's terrific.
Which is pretty contrary to most people in this industry.
Right. What do you like most about what you do?
Problem solving.
Yeah.
I really enjoy the problem solving aspect of it. I like having long form conversations with clients that have a problem that I have the unique experience to solve. You know what I mean? Even if they don't become a client, I still really enjoy that part of the process.
Yeah. And I imagine you've got a couple success stories. I mean, there are people that come to you for help. Tell me one or two of those.
I had a towing company, or a really awesome towing company that was really dealing with a lot of disputes.
Oh boy!
And we helped implement some technology and get the right verbiage and things with their actual payment process to help eliminate a good bit of that. You can eliminate it entirely. Anyone that says that you can is not being forthright, but
sure.
It did. We did eliminate a lot of it.
Yeah, that's terrific. Best way to contact you? How do you like? We'll put all of this in the show notes, but what's the ideal way for them to reach you?
So a good email address is info@paytechplus.com. Website's paytechplus.com. LinkedIn. I'm really trying to work on growing my LinkedIn presence.
Excellent.
So, I mean, Trey Rush, TreyRush. Anyone could find me on LinkedIn.
Yeah.
Shoot me a connection request. I'll most likely accept. Yeah.
Yeah, that's great. So again, that'll all be in the show notes. So y'all just scroll down whatever platform you're on and reach out to Trey. I would think, Trey, that just about any business that accepts payments like this is at risk. How do they know their? I think you used the term risk profile.
Yeah.
How would I know my risk profile?
So I'm actually coming up with an assessment to make that very easy for people to understand, or for business owners to understand. It's not quite done, but that's the goal, is to make it easy for people to understand. What I would say is just I could throw out some quick things to make people understand that they might fit in one of those categories. Do you accept payments online?
Yeah.
Okay. Yes. Are most of your payments over $500? Yes. Okay. That's a little bit higher risk. Do you have what I call a results may vary type of service? Yes.
Yeah.
Okay. So your coaches, your marketers, seeing huge problems with that. In
open to interpretation of deliverables.
Exactly.
Yeah.
Your risk of dispute is much higher. Therefore, your risk to the processor is much higher, and therefore your risk of funding holds, your account getting shut down, we're seeing a lot of that right now. And I've seen a lot of people on the forums that are like, oh, I've been with this company forever, never had a problem, highly recommend. And I'm like, you might want to be careful. A week or two later, my account got shut down.
Wow.
So it's one of those things where just asking questions and maybe shopping around a little bit.
Yeah.
I mean, I'm obviously willing to have a 15 to 20 minute strategy session with anybody
to go through that assessment.
Absolutely.
Yeah. So name some. You mentioned a few businesses there, because I want, if you're listening out there or you're watching the podcast, if this is you, reach out to Trey and give me a list of those. The high risk. Yeah.
Well, high risk would be part of that profile is how you take your payment, right? So how you could be a high risk vertical, but take payment in a low risk manner. Meaning,
interesting.
If you're taking a payment in person, that gives me the opportunity to check your ID, make sure that you're the person that you say you are, and 95% of all fraud happens online, right?
Gotcha.
So how you take it is one thing, but then the vertical itself, like what we were talking about, your credit repair, your any type of marketing, whether it be SEO, social media, web developer, all those are being treated as high-risk accounts now.
Interesting. Okay, so if you're any of those, definitely want to talk to Trey as soon as possible, because you don't know what you don't know.
Or businesses that work with those types of companies, which is where your CPAs and bookkeepers come in a lot, and these are companies that work with those types of clients and may not realize that their clients do have a higher risk profile and might have an opportunity to help them out.
What's the largest chargeback you've seen or disputed?
The largest one that I've seen, it was around $29,000. It was a contractor. I'm actually helping someone that's not a client, but probably will be. But I'm helping them right now. Is a $10,000 dispute from an HVAC company that installed some parts that they told the customer, "These are your parts. I'll put them in, but I'm not warranting it because I didn't buy the parts." I'm telling you,
can't vouch for them.
I can't vouch for them.
Yeah.
Okay, so if something happens, you're on your own. Sure enough, 3-4 weeks later, something happens. Customer calls their credit card company and disputes the transaction.
Goodness gracious!
And what you don't realize at that point is the process itself and how backwards it is. When this process happens, at that point, the burden of proof falls on the business owner. So you are guilty until proven innocent.
And you're out that money until...
that money's going to get held up. Best case scenario, they're going to pull that money from your account without any notice. Because, again, the processor, if you lose, they have to make sure they get that money to be able to pay the cardholder, right?
Yeah.
So it's not like they're going to give you a warning and say, hey, that's not how it works. And so hopefully you don't have payroll coming up or some big expenses because that money is just coming out. And then it could take up to 30 days to figure it out, and that's if you win. And even if you have all the proper documentation, you have everything right, it's still not 100%.
Yeah.
Because guess who makes the decision? That first round, who makes the decision?
I'm guessing the cardholder.
The cardholder's bank.
The bank. Yes. Okay. That's where I was going.
So for you to win as the business,
the bank makes the call.
The bank would have to rule against their own customer.
How about that? Yeah.
So. And there's certain instances where they just won't rule against their own customer. And then at that point, you have to escalate it, which comes with more charges and risk to do so. So they just bank on the fact that a lot of people won't fight it.
Yeah, they won't chase it for 6 months. They'll just write it off. Yeah, that's awful. Wow. But again, you can help with that. So.
Yep, that's some. I mean, there's some strategy involved, having the right verbiage, having your terms and conditions, refund policies, all that clearly laid out.
Yep.
That protects you as a business.
Yep. Preparing for it, it's going to happen.
Yes.
But being prepared and have the documentation properly mapped out will mitigate it at least a little bit.
Correct.
Yeah, that's important. It's important work that you do.
I enjoy it because it's. I feel like I make a difference, and with small businesses, you know what I mean. Like in the current state of everything, it's not exactly easy out there.
I know.
And it's the industry doesn't have a really great reputation when it comes to trust.
Yeah.
It's not been great to small business owners especially.
Yeah, with the amount of fraud that's rampant, this is just another thing where it can go wrong.
Well, in the past, it's funny because when I got in the industry, the main issue was over rates and fees. You know what I mean? Like these processing companies would rip off business owners.
Yeah.
Hidden fees, rate hikes, just a lot of predatory stuff, and that stuff is still out there. But unfortunately, even bigger problems have popped up, which kind of puts that on the back burner. And a lot of these companies just say, well, we'll give you a much higher but a flat rate. And these companies are like, well, I'll pay 3.5-4% as long as I know what it is. You know what I mean? So they're willing to be overcharged just to avoid any surprises.
To be informed, yeah.
So these PayFacs have really kind of like made those higher flat rates kind of the norm now.
Yeah.
So yeah.
That's interesting. Well, Trey, I really appreciate you coming on the Growing Your Business show and just sharing some knowledge there, sharing your passion and helping business owners all over the place. So
I really, like I said, I really appreciate you having me on, and helping me put some awareness, of this problem kind of out in the universe, and hopefully we help some people.
Thank you for joining us today on the Growing Your Business podcast. Please see the show notes for links to our sponsors, our social media, and to learn more about today's guest.